Hello, good people. How are you? I hope you are doing fine. I am the ACCA tutor, Mr. Jerry, and in this video, we're going to go through a question that is from the resource hub, okay, on the ACCA website. So it's more like a past exam question, and we will be helped if we pay careful attention to the presentation. Okay, it's linked to the inheritance tax, the IHT in the UK, and those who are attempting the ACCA TX UK variant are going to benefit a lot. Okay, so I think I've zoomed in everything so that it's clearly seen on the screen. Okay, so this is our question, ladies and gentlemen, and I'll try by all means to do it on a step-by-step basis using a spreadsheet, because in our examination we are going to use spreadsheets in most of the questions. Okay, so let us deal with the question. Mateo is nearing the end of his life. The current value of his estate is as follows. Okay. 30,000 shares, 4% holding in OB PLC, a quoted company, that is a listed company. They are worth £40,000. ISA deposits, £80,000. Main residence, £350. Rental property, £110,000. They all give us a total of £580,000. Under the terms of the will, Mateo will leave all of his assets to his son. Mateo has made the following transfers of value during his lifetime. So these ones are the lifetime gifts. Lifetime gifts. All right. On 1 November 2014, he made a gift of $203,000 into a trust. The trust paid any IHT arising on the gift. So if the trust was the one paying, so the applicable rate is 20%. On 1 October 2021, he gave his son $150,000 as a wedding gift. So this one is a pet. Okay, this one was a CLT. Okay, and that one was a pet, but we also need to consider the aspect of marriage allowance to a son, which is £5,000, and marriage exemption. Then on 1 February 2023, he gave £200 to his granddaughter. So this one again is a pet. Okay. The new rate bands for earlier years are as follows. So we are given the information concerning the new rate band. Sometimes in the examination, if the examiner does not give you the information concerning earlier new rate bands, you just have to assume that they are just the same as the current one. Is that clear? In the current year, we know that it is £325,000. Okay, so let me just divide the screen so that I do the computation on the other side of the screen whilst you'll be watching the question. Okay. Okay, so we are going to start by calculating the first stage, that is stage 1, lifetime tax on lifetime transfers. Okay. Lifetime tax on lifetime transfers. All right. So we also know at this time that only the CLT are going to attract immediate taxation. Right. The rest, the pets are not going to be taxed this time around, all right, until the person dies within 7 years. Okay. We also learned that there are 3 stages. All right, we need to first compute the lifetime tax on lifetime transfers, then the death tax on lifetime transfers, and death tax on the death estate. Is that clear? Good. Now, let's start our computations. So from the question, the information concerning the lifetime transfers is given the way I've written lifetime gifts. Okay, so we need to consider these 3 gifts in their order of occurrence. Is that clear? So the first gift was a gift to the trust, okay, which I mentioned or indicated as the CLT. Where is my pen? Okay, come on. All right, so the CLT, okay, this first gift number 1. All right, so that's our first gift. You can just say gift to the trust, or simply just say CLT. All right, and it's good practice to give the date of the gift. That was November 2014, so you can just say 1 November 2014. All right, you can widen the column, right? And we can just as well do some little bit of formatting where we need to ensure that the information is clearly presented. We can as well just highlight the cells and say we want a center alignment. Good. Okay. The next gift was 150,000 as a wedding gift. That was a pet, but you can attack a gift on a gift by gift basis. Is that clear? So that you just tell yourself that, okay, fine, let me just deal with the CLT, the first gift, okay, and what was the transfer of value? The transfer of value. The amount was 203,000, okay, 203,000, okay. Let me just put it just like that. It's okay. Don't put commas. Sometimes the commas need further, for the formatting, which might eat much of your time. Okay, you can just at least leave some space. All right, you can leave some space, or we know how to add, rows within a spreadsheet. We know that, but because of time, you can just leave some, some spaces, so that it is better to delete those rows which you no longer need as you do your computations. All right, these rows are related to aspects of certain exemptions which might not affect the CLT but could affect the other gifts, the pets. All right. Now you can stop here and then enter the data for the other gifts. Now there was a pet. This pet was on which date? 1 October. Okay, sorry, 1 October 2021. Okay, and how much was it? It was 150,000. All right. Then the other one was a pet again, and this pet was on the 1st of February 2023. Excuse me, I'm typing on the wrong cell. Okay, this was a PET. right? Don't let other information. We can as well, try to broaden the columns, widen them, right? And do the formatting which we did initially on the CLT. Okay, then from here, we then have to look at the aspects. Okay, I didn't put the amount of that last PAT. It was 200 pounds. All right, good. Then, like I said, you were supposed to leave some space, all right? But now, we could enter all the information. Like, for example, we know that this pet of 150,000 attracts a marriage exemption. So you can simply say exemptions, right? And you then say marriage, since this was the exemption you start with. And this one was affecting this particular PET, and we are saying 5,000 is going to be deducted from the gift. Is that clear? Okay, what about this other pet? Does it have another special exemption? Before we go to the annual exemptions, let's talk of the special exemptions related to these gifts, to each of these gifts. So there is also what is called the small gifts exemption. Small gifts exemption. This one applies to gifts which are 250 or less. Okay, a gift of 250 pounds or less is exempt. All right, it's not going to be considered for IHT purposes. So there was a 200 this, so we need to remove that one. So we are going to enter a negative 200. It's exempt, that one. It's your mark in the examination. Do not ignore it and say, oh no, this one is trivial, let me just ignore. If you don't write it this way, you're not going to earn the marks which you deserve. Okay, now we have done that. Let's now move on to what are called annual exemptions. Annual exemptions. All right. The annual exemptions. Is that the spelling for exemption? Annual exemptions. All right. There is the current year. Let us start with the CLT. The current year exemption. It is also good practice to put a colon because we are referring to many exemptions, isn't it? So let me just bolden it again. All right, so the current year, this one, let's start with the CLT. Okay, the gift was made on the 1st of November 2014, so it refers to the 2014-2015 tax year. All right, that current year, let us remove the 3,000 for that year, and then the previous year, right? Another 3,000 to be deducted. Good. Now, if we come to the PET, all right, this was in the year 2021, all right? So we're going to claim the 2021 year, all right? We're going to claim the 2021, 2022 year, and the previous year again. Remember, there was a big gap there, right? So obviously the previous year, the 2022, the 2020-2021 year was not claimed as well. So we just do the same, copy these two figures, Control C. What's going on? Oh, a chat was automatically asking to be prepared. Control V. Okay, good. Now, what about here now? Okay, this was the 2021-2022 tax year. All right, and we are having the PET for the 2022-2023 tax year. Remember, this one is February, okay? 1 February. It means it affects the 2022-2023. Whereas this PET was for the year 2021-2022. All right, the current year is 2021-2022. All right. So this one is for the 2022-2023. All right. So if this gift was to be entertained, if this gift was was eligible for the annual exemption, then it means the previous year was not going to be claimed. Why? Because it had already been utilized. Okay? There was no claim for the previous year with respect to this one. Am I talking to somebody? Only available was going to be the current year. However, this gift is a gift which is very small. This gift is a gift which is very small. So there is no need for us to claim the annual exemption because we are not going to be allowed to get a negative, okay, to negative IHT. Okay, so once the amount is lower than this, no need to compute the taxation because nobody's going to refund you anything. All right, so you just have to ignore that and proceed with your computations. Okay, you can just put a 0 or just ignore. Putting anything on that part. Now, what is the chargeable amount? Chargeable amount. Okay, for this one, we just need to get the sum. Okay, because if you just say equal sign sum, it will do the computation because they are the figures which we have put in negative with negative operations. So if you press your enter, you get your 197 as the chargeable amount. Okay, you just drag the formula to, because in the exam you're not going to get all the opportunity to do one by one. Okay, so you have obtained your chargeable amount. However, it's very, very important to indicate to the examiner that this one not taxable at the moment. Okay, no lifetime tax for the PET. All right, now this CLT occurred sometime in 2014. However, the death of this guy is expected to be, okay, the examiner here is not sure whether this guy is going to die, but he is just saying, suppose this person was to die on 31 December 2025, which is a future date, isn't it? It's a future date, but they want you to show them your skills in computing IHT under such circumstances, okay? So don't question the examiner and say, oh, we are not yet in at 31 December 2025. How come you are saying that all those will be fruitless efforts, okay? Because he's just saying, assume that this person was going to die on this particular date. Excuse me, how much would be the IHT? Okay, so you just need to follow the steps. Do not question examiners, because that is not going to help you. Okay. Okay, now once you have done this, all right, once you have done this, you then have to proceed to your numeric bands. All right. The NRB. The NRB is how much? Is 325,000. Right? And we have to look back 7 years so that we deduct all outstanding gross chargeable transfers. Right? For for the past 7 years. Okay, for the past 7 years. Okay, so let me just try to widen this part a bit. Yeah. So from the question, I think the information about gifts which were made by Mateo was this one. So we do not have any information about other gifts which occurred beyond beyond this CLT of the 1st of November 2014. So put a 0 there, and we come here and say the CLT, the NRB, the net NRB is just 3.5,000. All right, now, given this information, you can, let me just do some formatting in terms of, because if you do not put that information out, these underlinings, you might end up being confused in our computations. So, good. So after that, we get what is called the taxable amount. Taxable amount. Now, the new rate band balance is bigger than the chargeable amount. In this case, it means that we are not going to get any taxable amount. Like I said, you are not going to get a negative taxable amount. Once such a situation looms, then it means that there is a zero tax. All right, there is a zero taxable amount. Similarly here, this is why I said, because the current year exemption is 3,000, when the potentially exempt transfer is 200 pounds, then it means that there is no need to consider the use or the claim for this particular allowance. So this time here now, because the CLTs are chargeable obligations, but they are covered by the NRB, it's essential to include the figures for the NRB. Why? Because remember, when we will be doing further taxes, we are going to look back. We're going to look back, all right, 7 years to see if there are any chargeable, gross chargeable transfers which occurred for the past 7 years. So it's very relevant to keep that figure now, those figures. So can we compute the lifetime tax, the IHT, on the zero amount? IHT payable on the CLT, obviously this one is zero again. Why? Because the taxable amount is zero. Okay, but can we obtain the gross chargeable amount to be transferred or to be carried forward for future use? Yes, we can do that. Let us get that. Gross chargeable transfers carried forward. So the gross chargeable transfers carried forward are going to be found at both of these gifts, the CLT and the PAT. Now for the CLT, okay, we determined that the NRB was higher than the chargeable amount. So, but we cannot ignore the chargeable amount. So we then have to take the chargeable amount as it is, which was 197. In future, we might tax it. Okay, currently it has succeeded. So we have deferred, all right? We have deferred the charging of the transfer for now. Why? Because it was less than the NRB, all right? But it might or it may affect the computation of the chargeable transfers in future periods, as you will see. Okay, now for this pet, it is not chargeable now. Why? Because the person is still alive. So we just take the figure as it is again. Is that clear, guys? Good. So for now, these are the figures we have for chargeable transfers, the gross chargeable transfers. Now let's move on to the death tax on lifetime transfers as our second, number 2, death tax on lifetime transfers. So let's compute that one as well. Death tax on lifetime transfers. Okay. It's good again to bolding the title so that the examiners won't find it difficult to locate your answer. So we start with the first gift, which was the CLT. Okay, and this one was given on the 1st of November 2014. We move on to the paid. This one was given on the 1st of October 2021. Then the last PET was given on the 1st of February 2023. Okay, now when did this guy die? Okay, he died on the 31st of December 2025. Okay, so from December 2025 going back 7 years, can we say this CLT has to be subjected to IHT? 2014 to 2025, it's more than 7 years, isn't it? So this CLT is not subjected to IHT. However, we can't ignore it. We can't ignore it because it is almost nearer. It is nearer to this gift. Okay, the pet. It's not nearer to the death, but to this pet, it's almost nearer. So it applies. Okay, it's the distance or maybe the difference between October 2021 and November 2014 is less than 7 years. It's less than 7 years. Even if it means by a month, it doesn't matter. Okay, it's less than 7 years. Is that clear, ladies and gentlemen? Excuse me. So it's something we can't just ignore. Sorry. So okay, you need to mention to the examiner that no further action, further tax due, no further tax due with regards to no further tax due on the CLT, all right, as gift is more than 7 years, all right, prior death. That's 7 years prior death, okay. Okay. Now, we can't leave this statement as long as it is because it is now cutting across the whole spreadsheet. So what we need to do now is to wrap the text, isn't it? So we come to the format options, the alignment options, and we wrap the text. But now, again, after you wrapped, it seems like this the cell has become too high, so we just have to, you know, narrow it to somewhere fitting. Okay. Okay, and we can as well widen the, you know, the columns. Let's widen the column a bit. Okay, and we then as well try to engage, can engage this and choose the top alignment, that, and continue further to, I mean, reduce. Good. All right. You need not to be a specialist in Excel, but you need to show the examiners that at least, you know, you're somewhere there. Okay. Some formatting. All right. And can increase in, I mean, the reduction better. Okay, now what about this other PET? Remember, what we are interested in are the chargeable amounts. Chargeable amounts. So for this CLT, there is no chargeable amount, so just put a not applicable sign there. And we come here and we know that the chargeable amount was 139. Okay, this is the column we are looking at. So the chargeable amount there is 139 because that was the amount of gross chargeable transfer carried forward. Okay, so we're going to adopt that one, 139 for equal sign 139. Now, somebody might argue and say, okay, fine. So if you are taking that one, why are you not taking this other one? We said this other one is not going to be taken. Why? Because at the time of death, it was now over 7 years. All right. At the time of death, this gift was given in 2014, and this person died on 31st December 2025. So we cannot consider the CLT for IHT computation. Are we together? Why? Because the gift has since lapsed. All right. Actually, for IHT computation of the lifetime transfer on death, right? It is no longer, although it was, it was eligible for IHT immediately upon the gift. It is no longer palatable to apply the IHT. Why? Because it's over 7 years since the gift was given. Okay, good. Now, what about for the other PET, the 200 one? This one is 0. Why? Because it's a smaller gift. It's a small gift. I'm sure I'm being heard clearly and loud. Okay, now I think we need to insert another column where we'll do with the NRB, the new rate bands. Okay, so it's very essential because now we need to do that. So NRB, we know the NRB is 325, and the applicable PET gift we are looking at now is the PET on the 10th of 2021. On the 1st of October 2021. Okay. Now we need to look back. Okay, we need to look back for the chargeable gross transfers or gross chargeable transfers, GCTs. okay, for the past 7 years. So let us look for those past 7 years. Need to look back. Now, we understand that there was a CLT, all right? Please be with me, all right? There was the CLT, and we must not forget about that CLT. Otherwise, hey, there was this CLT, ladies and gentlemen. Although it was given sometime in 2014, all right, it's still less than 7 years, because 7 years was supposed to be on the 1st of November 2021. So we are still within the 7 years. All right, we are still within the 7 years. So this particular CLT is still applicable, it's still relevant for the purposes of NRB utilization, the new rate band utilization. So I'm sure you still you recall that there was a 197 which was not charged initially. All right, we didn't charge. Why? Because we said it was less than the 325. This 197 was not charged. All right, that's why we had to carry it forward, so that we will charge it when time comes. And fortunately, the time came. So we need to reduce the new rate band by that amount. By so doing, we will be charging the 197. Okay? In a way, we'll be charging that 197 for tax purposes. So the taxpayer is no longer going to enjoy the full 325,000. All right? His enjoyment has been curtailed. Okay? Now, once we did that, we get a certain figure. We need to get the difference there. What is the difference? Equal sign, sum. Let us add these two figures. We get a 128. Okay, and this 128, ladies and gentlemen, should be deducted from the chargeable amount of 139. So let us put an underline there. And we can as well just type it in a negative form, minus 128,000. So let us not put commas, so that we'll be able to do the addition. Okay, so we have got the taxable amount of 11,000. All right, the taxable amount is 11,000 pounds. Okay, what shall we do there? Okay, now I think we need to determine the IHT at 40%, which is the death tax at 40%. So equal sign, this amount multiplied by 0.4. That's 4,400. Okay. Then obviously when death occurred from, remember, we are looking at the period now between the giving of the pet, this pet, and day of death, which is 31 December 2025. So how many years now? because we want to see any tapering. So we can actually talk of taper relief. Taper relief. Why? Because it's more than 3 years, but less than 7 years. So taper relief, we are looking at how many years? From 1st October 2021 to 31 December 2025, that's 2022, that's 1 year, 23, 2 years, 24, 3 years, 25 October, that's 4 years. So this is 4 years, that's 4 years, but less than 5. So if we consult our text tables, this would be 40%, isn't it? 40%. Okay, so what's the 40% of 4,400? Okay, so equal sign minus 0.4. Why are we saying minus 0.4? We are saying we want that number to come out negative, okay? So minus 0.4 multiplied by this, we get a negative 1760, isn't it? Then we get our ultimate IHT payable, isn't it? The ultimate IHT payable. All right, but because of time in the examination, we can as well finish with, we can actually first deduct the less IHT payable on lifetime gift, lifetime gifts, if they have paid an IHT. However, we determined that there was no IHT paid. Why? Because the CLT, which was there, which was computed sometime earlier, was less than the new rate band. So there was a zero tax paid. All right, zero tax paid during the person's life. So let's now compute the IHT payable on death. So we can underline there and there as well, so that we get the double underlinings. Okay, so the sum there should be, we are starting from this text, okay, the 4,400, and we get 2,640. Okay, in the exam you can as well underline that one so that you won't confuse the figures. Good. This person died on 31st December, towards the year end. So if it is towards the year end, you can simply say 6 months after the death. Okay, the earlier of 6 months after the death, which is somewhere around Okay, guys, we are simply just copying the information we have. All right, so the death estate basically is comprising of these items. All right, these are the items in the death estate. So we're going to copy the items and paste them straight away in the question. So the first thing was the shares. Okay, 10,000 shares, and the value of these shares was can just put the value here, 40,000. Sorry, no commas. 40,000 shares. Then ISA deposits. The ISA deposits, they were 80,000. Okay, and main residence. You can't afford to lose this marks. Sorry. Okay, can't afford to lose these marks. Main residence. The main residence was worth £350,000. Then a rental property, 110,000. Okay, what's the total we gave as the gross chargeable estate? My laptop is now misbehaving. I'm sorry. It's refusing now. It can cut the recording. Sorry for that. I wanted to do some formatting. It seems like the pressure is too high. Okay, the rental property. With time, you can just adjust and put them in capital letters, provided there is still time. It's confusing. So there's nothing I'm gonna do about that. I'm using a lot of applications at the same time. Recording and uploading sometimes strains the computer. Right, so gross chargeable estate, gross chargeable is the total of all those things, chargeable estate, which is the total of these. So people sign some. That's 580, and then you need to consider aspects like the new rate, the R new rate band, the residential new rate band, and we know that this one is 175,000, and it should be negative for it to be deducted. And then we deal with the normal new rate band of how much? 325,000. This one has got its own rules. We need to look to then deduct all the gross chargeable transfers for the past 7 years. Gross chargeable transfers. All right, now the applicable ones are only this amount, the 139 amount. That's the gross that is only applicable for this computation. Okay, so we need to put it back into the arena, the 139,000. So for you not to be mistaken, just have to put an equal sign and go back to the figure you want to put there. This one. Just press enter and you have copied the correct figure. However, you then have to put a negative, right, to the figure, because if you don't do that, it will remain in addition, which might confuse you in your computations. Okay, and then we get the difference here. Remember, this is the sum. Right, so 186 is the new rate band remaining, and this 186 should as well be negative. right, should be negative. So let me try to put a negative before the sum, right? I put a negative there. Let me press enter. Good. It has become a negative answer which I need for my computations. Now, here, my computer, like I said, is refusing. Okay, it's refusing to give me the information I need. So let me try to draw the underlinings by my hand. Okay, so we need now to get a certain figure which is very, very essential for our computations, because if we do not have that figure, we won't go anywhere. So equal sign sum, want to get the ultimate chargeable estate there. Okay, chargeable or taxable estate. Okay, now the IHT at 40%. Okay, this is equal to this amount multiplied by 40%, 0.4. That's 87,600. So I'm trying to put the underlinings manually, but it's proving fatter. So I'm doing these underlinings myself. Okay, so the taxable amount or the amount payable is 87,600 the states, and this should be remitted by the due date. Due date should be similar to the one we listed there. Okay, the due date should be 30 June 2026. That's the due date. But it's refusing to do further formatting. Okay, maybe I have overheat the machine. Okay, but I'm sure we have done justice to the question. I don't know what you guys think, but we have done everything that was required. The death tax computation or death estate, and then the computation of death tax on lifetime transfers. Okay, let me clear up these drawings. Oh, it's refusing again. Okay, it doesn't matter. All right, good. This time around, it did not disappoint. Okay, those underlinings are essential. Okay, they are underlinings, guys. Okay, I was not crossing out the others, but I was actually trying to create manually the underlinings. Why? Because the machine is refusing to allow me to do any formatting. Right? Maybe I might zoom out a bit. No, it's no longer clear, isn't it? I wanted you to check out this part clearly. Okay, but just try to zoom out. I mean, zoom in and the figures. Then the initial stage one is this one. Stage one. The lifetime checks on lifetime transfers, right? It's where we started from. Okay, lifetime checks on lifetime transfers. Then we move to the death tax on lifetime transfers. And lastly, the death tax on death estate. was quite a daunting task, but something that could be done easily if you practice this quite often. Is that clear? So in our assignments, I've given you these questions, and I expect you to do the same using a spreadsheet. Okay, you must be accustomed to the use of spreadsheet. So those who would like to contact me, this is my number, +263 774 596 368. Okay, that's my number. Guys, if you want to chat with me, you can as well contact me on WhatsApp. Okay, guys, so I hope you are enjoying your days, your holiday, everything. All right? And please continue to love yourself. Life is too short. All right, guys, goodbye. See you in the next video.